City in Midtown Manhattan. That's the third most listened to show in all of America. Hello, my name is Glenn Beck. I'm so glad that you've tuned in today. I've been preparing a piece for the economic stimulus packages from all of these clowns that are running for president. And yesterday, as I started to put it all together, I thought, jeez, none of these guys really get it. None of these guys really see it. And I thought, who is it that I agree the most with on the economy and what the fundamental problems are on the economy? I think it's a guy that I just disagree with so vehemently on almost everything else, and that is Ron Paul. I didn't even want to speculate. I didn't want to, leave it to the internet. I thought I would get Ron Paul on the phone and find out where he stands on the economy, what the problems are with the economy, what he thinks is coming in our future, and how he would correct it if he was president of the United States. And he's on with us now. Hello, Ron Paul.
Hello, nice to be with you.
Nice to be with you, sir. First of all, tell me what's happening with the economy.
Well, it's making the correction that was inevitable due to the malinvestment and the unbelievable debt accumulated due to a Federal Reserve policy. Once they create credit out of thin air, they cause business people and savers to do the wrong thing, and you always have to have a correction. So dealing with the recession is very difficult because the cause was a few years ago, and we have to work our way out of this, which means there has to be a correction.
Okay. If you were president of the United States, what would you do?
Well, the advice would be return to the market economy. First, we would have to deregulate. I mean, we had a crisis a few years ago, or at least a supposed crisis with Enron, and they super-regulated. So I would repeal certainly major portions of the Sarbanes-Oxley. So we would argue for deregulation. Then, of course, there should be major tax reform.
Okay. And Hang on. Before we go into tax reform, let me just start with Sarbanes-Oxley. I don't want to get it's way deep. So let's kind of surface skim here so we don't make people's heads spin off their shoulders. The deregulation, some people will say that part of the problems, for instance, with the bonds is that these insurance companies, they had no regulation. So they just kept insuring people even though they didn't have the money.
Yeah, but that was all government, whether you have the FDIC or the FHA or, whatever. But the main problem is that we don't save money. That's where capital is supposed to come from. Instead, we print money, we create money, we call it capital, and then interest rates may be 1 or 2 or 3%. And business people think, well, there's a lot of savings going on out there, so they do the wrong things. If interest rates were very high, they would be more cautious, but instead, we create the bubbles. People start building houses to extreme, and then they overbuild, and then you have to rest in order for the markets to catch up. And that's when the bubble collapses, and we're in the midst of that. So, but government does it in both ways, excessive credit and also pushing money into certain areas such as housing or the financial markets, and they overprice, and then the prices have to come down. But so it's a very difficult situation, but the main goal should be the restoration of the market economy.
Okay, so now you mentioned tax cuts. The Congress, both sides of the aisle, are talking now about $800 tax rebates to the poorest people in America. I don't know about you, but I've never seen a job created by a guy who is at the bottom of the ladder. This seems just like a plan to get people to spend, which to me is what got us here in the first place.
Yeah, you're right, and all you do is you encourage consumption, and we're overdoing consumption right now. It's not a tax rebate if you send somebody a check for $800 that's not paying taxes. That's a welfare check.
Thank you.
And that money really doesn't go to producing jobs. What you have to do is restore the savings and encourage capital investment. You have to eliminate taxes on capital gains, and we have to do whatever we can, get rid of the death tax, and eliminate taxes on dividends and savings. All these things would encourage savings, and then have a market rate for interest rates to give us the signal on whether we should be investing or saving or spending. But that doesn't exist anymore, and that's why we have these perpetual bubbles. But I think this bubble right now that has been kept together for quite a few years is a major problem, and the unwinding of this bubble is very critical. But the biggest bubble is in the dollar bubble, and now the dollar is coming under attack. And what are they proposing? Excessive spending, deficit spending, which where are they going to get the money? They don't have any money in Washington. They either have to borrow it from China or print it, which means there's more inflation, or the Federal Reserve comes in and said, like yesterday, drastically lowering interest rates. How do they lower interest rates? They print a lot more money. And yesterday when they announced that, the dollar immediately reversed itself and sharply went down. And it's the weakening of the dollar that is the crisis that we face, because everybody suffers from that. You and I suffer because all of a sudden our dollar in our wallet buys 80 cents worth of goods instead of a dollar's worth, so we all get poorer. And we have to stop that cycle.
Nobody understands that while they say, let me give $800 to the poorest, they're really not doing that much because the dollar is worth so little. The poorest are being hit by inflation harder than anybody else.
That is exactly right. The do-good liberal who said we have to take care of everybody, and they are well-intentioned, the more debt they run up to give to the poorer the people get, because they cannot keep up. Take, for instance, even Social Security recipients. Their inflation rate might be 10 or 12%, and we give them a cost of living increase of 2%, so they're losing. And you just can't keep that cycle going. You have to balance the budget. You have to live within our means, and then we have to restore confidence to the dollar. So it's a major, major undertaking, but we have to reverse it. I think the most immediate thing is to cut back on spending, not increase spending, and get the money back into the hands of the market of savers and investors and people who are spending. But government economic planning does not work, and that's what we're coming to the realization.
Well, when you say government economic planning, the Fed is not the government. And the Fed just made the largest cut that they have made since 1984. It is the first emergency cut since right after September 11th. There's talk now that they may cut another quarter, which is insanity. There's just no more that you can cut unless you destroy the dollar. What are your thoughts on the Fed?
Well, they're the culprit. They caused it. They caused it by keeping interest rates artificially low. And how are they trying to solve the problem? Keeping interest rates artificially low. And for an hour or two, the market's rebounded because they're conditioned to listen to that, and they figure, the market's going to go up because interest rates are coming down. But today, I predict the markets will probably go down again because that was only temporary. You cannot change the long-term trend of the market. You can temporarily tinker with it, and you can artificially make them go up. But eventually, the market is more powerful than the Fed and the government, and the rejection of the dollar is the crisis that we face, and we face that because we create too much money, and we do that because we spend too much, both overseas and domestically. And we have to deal with this. We have to live within our means. We could just freeze all spending domestically. And I know we disagree on the overseas expenditures, but why do we pay for the defense of Europe and Japan and Korea? We could save hundreds of billions of dollars, and our defense wouldn't be weakened. So this is my argument, and it's well received. I said, why do we pay for the defense of Europe? If we could save that money, why don't we spend that money here? Just think of all the money that would flow back to this country if all those military personnel were stationed here spending the money in this country, and we wouldn't be less safe. I'm not necessarily
opposed to pulling troops out of some parts of the world, but I don't want to get into that today.
Yeah, we don't need to do that today.